Do you think credit card companies are immoral?
I think a company is amoral in a sense. I think the people involved in it that are at the top and the way they're making money, I don't think it's the right way to make money. I think there's you can serve people in a way and run a business in such a way that it helps a lot of people. I don't think causing people to go into debt is a worthwhile business to be in. And there's a lot of companies that make billions of dollars. Would we say Sallie Mae is a moral company, or are they evil? As a company, they're just a company. But the things they do in order to attract business, we would say is immoral. Like paying financial aid counselors and putting them on cruises in order to pitch Sallie Mae products, that's pretty gross. Putting them in call centers and making them think they're talking to a financial aid counselor when it's a Sallie Mae representative, we would say is immoral and gross. So there's practices in those industries, the way credit card companies go after us and the experimentation they do, we would say that's pretty gross. But as far as a company goes, a company's a company, and it doesn't really have a moral compass as far as that goes.
Do you think there's any way for a credit card company to do it right? For a credit card company to take what you say and say, you know what, we're going to fix the problem. It's still going to be credit, but we're going to solve these issues, every issue that you say.
Well, this lady called into the Ramsey show this week, and it was so funny. She was like, yeah, well, I'm with this nonprofit now that's helping me with my credit card debt. And Capital One is the one who told me to reach out to them. I was like, you're going to trust a credit card company to help you get out of the debt that they got you into? That makes no sense.
It does, because they want to get paid back. If they default on her, they're getting pennies on the dollar.
Which
so
is
it makes
part
sense.
Of it. They're like, well, if we can get her money back, we'll be doing her a service. But overall, I don't trust credit card companies with a 39.5-foot pole.
Do you know what the terms were of that? Like what she signed up for?
I don't know. I kept asking her.
This.
She didn't know. I was just like, this sounds like a scam. It sounds like one of these debt relief settlement companies that you sign up for, that you pay them a bunch of money and they tank your credit on purpose and then doesn't resolve the issue. So anytime you're using debt to move around, to pay off other debt, it's just you're not actually solving the root problem. And what I found is people who avoid credit card debt completely and avoid credit cards, they tend to just have more of their income at their disposal because they're not tempted. It's really hard to go into credit card debt when you don't have a credit card. That's the bottom line at the end of the day. Yeah. You can't spend more than you make if you can't spend more than you make.
What do you think is the root problem? Because you said you can solve it by just getting rid of your credit cards, but that doesn't necessarily, I'm assuming, solve still the root problem in which why people go into debt.
Couldn't that be akin to saying, well, get people off drugs by just eliminating drugs? If drugs didn't exist, no one would be addicted to it. Then wouldn't it just go to something else?
I mean, if you look at addiction it's a strong form. Some people have spending addictions, but for the average person, they would tell you, like, I'm not addicted to credit cards. Yeah, sure, I have 16, and I try to maximize the rewards, but I'm not addicted. And so credit cards are a different beast because we've socialized them to the point where it's so normal. And I have a quote from Dave in the book of credit cards have become the cigarette of the financial world. It's normal, but I think it's a bad habit that is slowly killing people. But it's not one of those where it's like, it's not meth. You know what I mean? Like, you can live a long time and still smoke cigarettes, and some live a long life, and they're fine, and they live normal lives. But I still think you'd be better off with your health and your financial health without it. So that's the big thesis there. And I walk through 8 different character archetypes in the book that I think will hit someone reading or listening, where they go, that's me. I consider myself the perfect spender.
All right.
I've heard. I pay off my card every month. I've never spent a dime in interest. How many times have you said that or heard that, right?
Every time.
Every time. And it makes you feel like you're winning. But here's the thing. Even if you never spend a dime in interest and you pay it off every month, that still leaves you with $0. It does not mean you're moving ahead financially. It just means you're not getting behind. And I want people to move ahead. And I think playing this game is just sort of this monopoly game created by the credit card companies to make us feel like we're winning. I'd rather you have no debt. But I think it's better to use your own money, and I think you make different decisions when you do that.
So you did make the claim that I'm guessing is based in some sort of data that if you have a credit card versus a debit card, you're prone to spending more money on a month-to-month basis with the credit card.
Yes. And I cite an MIT study that was done. It used fMRI technology, and it scanned the brain when people use credit cards. And what's wild is that not only did they say, hey, when you swipe that card, it sort of releases the brakes on spending, but not only that, it hits the accelerator and causes you to spend more, which is a pretty wild thing. They already knew that, spending without little friction, spending other people's money, it's going to sort of like release the brakes a little bit. But not only that, it causes you to actually spend more on top of that, which is compounding the problem.
I've seen a similar study that found when you start spending money, that you spend more money as a result of spending because you're already in a habit, regardless of credit or not. I forget what the exact study is, but a philosopher, I believe, in like the 1800s, who started looking at buying furniture.
Oh.
And he bought furniture. He bought like a new chair in his living room. And then all of a sudden, everything else looked outdated because he got the chair. So then he wanted the couch. So he got a new couch. And then the rug looks weird because those two are new and the rug's kind of, get a rug. Wardrobes are very similar. When you buy a shirt, well, now I need a new pair of pants to go with the new shirt and a new pair of shoes. And that's just a spending habit that I think is...
It's just a cascading effect.
It is, regardless of debit or credit. I think if you spend, I would like to see a study if people start spending, do they spend more because they've already spent something? It's like the floodgates have already opened.
Yeah. Well, that's how I feel about it. I mean, with credit scores and credit cards, it's sort of this gateway into other types of debt. And once you have a payment on one side of your life, what's a payment on another side? What's a car payment? What's a mortgage payment? And I think we need to retrain our brain to stop thinking in terms of payments and start thinking in terms of freedom with our income. Because that's really, we say it's your greatest wealth building tool. And when you give that to lenders, even if you're paying off a card every month, you're still giving it away. And that's money that I think you would have kept more of your money if you had spent your own. And I say in my sort of end thesis in the chapter is when it hurts less, it costs more. When it hurts less emotionally, which is what happens when you swipe instead of handing over $100 bills in cash, we would revolt if we had to hand over $100 bills to pay taxes every year. But because it sort of comes out of our paycheck, or when we spend, it sort of just gets swiped on a card, we don't feel the emotion of that money leaving our bank account. Just a digital number changes slightly.
It's similar with casinos and chips. I heard one of the reasons they switched to chips, I mean, not only is it easier to carry around, but because you don't associate that with money. It's a lot easier to spend chips than it is to be like, here's 100, 100, 100.
Well, think about that with credit card points. Why do you think they moved from cash back numbers to you get 150,000 points? It sounds like an amazing, huge number. Instead of going, here's $500, they go, here's 150,000 points.
Credit card companies watching this could actually do some crazy stuff with that, with marketing and saying you're going to get 1,000,000 points. But in the fine print to say the 1,000,000 points, that's $100.
Yeah. When I talk, I actually talked to an ex-Capital One employee, and she was talking about all the experiments they run and the A/B tests when they said, hey, when we switch to points, it causes people mentally to flip on a different part of their brain because they don't associate points versus money. It just feels like I'm winning. It feels like I'm at Chuck E. Cheese. Yeah. And so the stuff that she unpacked, it just made it even like more gross to how these credit card companies come after us to where I'm like, even if you think you're winning, you're not. And someone else is losing at the expense of you winning.
What are some of the other secrets?
Life insurance is one of those things that makes sense for a lot of people out there, but most people just put it off because it feels complicated, expensive, or time-consuming, but it doesn't have to be thanks to our sponsor, Fabric.
Fabric by Gerber Life is term life insurance that you can get done today. It's made for busy parents like you. It's all online, it's on your schedule, right from your couch. You could be covered in under 10 minutes with no health exam required.
If you have kids, and especially if you're young and healthy, the time to lock in a low rate is now. And even if you have life insurance through your employer, it may not offer you enough protection for your family, and it usually does not follow you if you leave your job. Fabric offers flexible, high-quality policies that fit your family and your budget, including options like $1 million in coverage for less than $1 a day.
Fabric is partnered with Gerber Life, trusted by millions of families for over 50 years. There's no risk, and they even have a 30-day money-back guarantee, so you can cancel at any time. Fabric also has free digital wills, tools to invest in your kid's future, and more, all right from your phone.
Join the thousands of parents who trust Fabric to protect their family. Apply today in just minutes at meetfabric.com/ICHclips.
Again, that's meetfabric.com/ICHclips. MEET fabric.com/ICHclips. The link is also down below in the description. Enjoy.
What are some of the other secrets that person told you about credit card companies?
Oh my gosh. Well, the fact that they run, Capital One in particular, runs 10,000 experiments on consumers every year. That boggled my mind. Like, there's only 365 days in a year. How is this possible? They're constantly running these A/B tests to figure out what's going to get people to spend more money. That part was pretty gross. And then just all the amount of, like, they can devalue your points at any time.
What are some of the tests they run? Do you ask
they
about
didn't
this?
get into the specifics of what they did, but it's a lot of switching the mentality and the verbiage around it. And so, but I think a lot of it is when they move from cash back to points, that there's a reason all the credit card companies have moved to talking about points and airline miles. And so I break down how the airline miles work and how much you'd actually have to spend. And it's like 50 grand in spending gets you $250 in rewards or $500. And so it's just when people tell me I get a free flight and I spend how I normally would, I'm like, you would not normally spend $50,000 in a year.
The one
for the
counter
average
to
income.
that is that mostly you'd be able to get those free flights with the sign-up bonus, which have a much lower spend. So let's just say your example, $750, which is
Sure.
about the sign-up bonus for a higher-end credit card, or like mid-tier to upper mid. Usually that would require a spending of anywhere between $4,000 to $10,000 in 3 months. So all of a sudden, then the cash back seems a lot higher when it's just a sign-up bonus versus keeping the card for years and then like year 3 spending 50 grand. A lot of people
most
wouldn't
people
do that.
is they go like, well, I wasn't planning on spending 10 grand. Like 10 grand in 3 months is a lot because you can't, most people can't put their mortgage and utilities on there. And so we're talking about consumer spending, groceries, gas. So what do? Well, we'll eat out again this month because we got to hit the number. And so I think mentally and psychologically, they know you're going to spend more by doing this in order to get the bonus. And maybe you'll use the bonus, maybe you won't. We found a lot of people forego the bonuses, forget, it expires, whatever the thing is. They're not actually utilizing it to its full capacity. To that end, it's causing people to go into debt in order to get a bonus, which then negates any reward that
Now,
could
see,
have
that I
happened.
would agree with, that a lot of the bonuses go unused, and the same thing with gift cards. There was this whole study that I read recently on gift cards of how many of them just go
Money
unused.
just sitting on there.
And it's genius from the business perspective because essentially to them, it's a free loan. Businesses are able to get 0% interest because you're buying a gift card. And honestly, it's like a 50-50 whether or not you're ever going to use it. So it's free money for the businesses.
But we
Just
tell
say, hey,
ourselves,
gift
well,
cards.
it's free money. I might as well do it for the free money. And I just think that mentality causes more people to go broke than it causes them to ever build any wealth. And I get it. Like no one's claiming they're building wealth with credit card points, but at the same time, they see it as like a piece of being smart financially. And I just disagree fundamentally that I think Graham would be just as well off if he stuck to a debit card, if not better off.
So
That's
I
the
will
hot
say
take.
my perspective changed a little bit after chapter 3.
Hey, that's a win.
The only reason why it changed a little bit is because I actually saw how bad the data was on it, which was like the main thing for me was 49% or whatever number it is can't pay off their monthly credit card statement. Now, for me, that's really, really, really sad because they're getting charged exorbitant interest rates. It's just going to keep them under, right? And it brings me back to this conversation that we had with Grant Cardone, actually. And I was saying it's better to encourage people to get high-paying salaried positions. And he was saying, no, spend your last few $1,000s on education to start your own business. But most businesses fail in the first 5 years. 50% of businesses fail. So you're like setting them up to fail eventually.
And he said, well,
down
if they
the
had
line.
bought my course,
Well, no,
maybe they would have
Sure, you
succeeded.
could make that argument, but his whole thing is like, if you're just persistent and you keep trying. I'm like, sure, if you play it super smart, but if you look at all available data, people do not win when they're trying that.
Not
Generally
everyone
speaking.
should start a business.
Now, here's the thing. If you're super smart about it, yes, I believe the percent would change. I'm sure 90% could succeed in business if they continue pushing year after year, get persistent, and continue working on it. The same with credit cards. If you're super smart and super disciplined with your spending and you don't spend more because of it and you never allow them to charge you interest because of it, then I think that you can get ahead. But if you look at all available data, I would never encourage every single person listening right now to start your own business because I know most fail. I would not encourage everyone listening to this to start day trading because I know most day traders lose money. So now if I'm looking at data around credit cards, it's like, well, most people lose, right? If you're smart, you'll win. And I do think it's good to win. Right? I do think it's good to get the cash back on credit cards. I think it's good to get the sign-up bonuses. I think it's really nice to go into the lounges when I'm flying. But I think it's important about being intentional about the decisions that you're making rather than being, super, I would say, motivated to get a credit card because, we're pleased to accept you into the card or buy a sign-up bonus and you're not actually spending the points and stuff like that. I think it's important to be intentional about it.
I just know human nature is, I talked to a girl today, man on the street in Las Vegas. And I was asking her about her credit cards. Like, hey, how many do you have? What do you use? And she's like, I have this one. Then I have the Apple one. I was like, what made you get the Apple one? She's like, well, it's titanium. And I saw my dad with it.
No,
and I'm like,
really?
That's humanity. Like, whether we want to admit it or not, that's humanity. And I talk about in the book the actual history of credit cards. And it's funny. It started with Frank McNamara in a diner in New York. And he forgot his wallet. He was so embarrassed that he asked, hey, we need a credit system. So where if I forget my wallet, I can still pay. The first credit card was born, the Diners Club.
Yep.
And the first one was actually made of cardboard. Not quite the flex of the titanium cards, but the fact that we're lured in by, she literally said, well, the card's just pretty. Like, that's an insane reason to get a credit card. But it's one of the reasons and one of the main reasons people do it. There's a reason we love the Amex. It's shiny and thick. And the thicker it is, the more well off you are. It's a game they've created.
I just like the idea of being morally consistent. And if I wouldn't encourage everybody to be a day trader, I don't know if I would say to everybody that you should get a credit card when you look at the data.
Here's the thing, though, with your example of like business or day trading. I think it's a terrible thing to do that out of desperation for money. If someone says, hey, I'm broke, I need to make $1,000, you would never say start a business because, like you said, so many people would fail. Or a sign-up bonus. But I think it's like, hey, I got this idea and I want to be an entrepreneur. And if it fails or succeeds, I just want to try it. Then I think it's fantastic. I think the experience that you get from running a business or even day trading could be really invaluable. Even if you lose, the experience that you get from that, I think, is invaluable.
I agree, and I do think there's some selection bias if you look at the people watching your videos of like the 5 best credit cards to get in 2023. I think if you look at the results of that, more people are probably winning than losing. Oh,
gosh.
Imagine
imagine those videos of like, you should get this card because it's titanium.
Exactly,
look
because
how cool
you're
it is.
actually outlining like how you can be smart with it. And it's not just like, oh, get this card because...
Well, and no one's reading the fine print. If you ask people what the interest rate is on their credit card, they'd have no idea, most of them. Unless they have a balance and they're having to pay that.
Right.
You know what I mean? Like, they all get starry-eyed at the bonuses and not looking at, here's what could happen. You may get 2%. You may as well get 22% in interest.
Another hard thing, though, is there any significance to paying that interest for a few months to get a slap on the wrist and learn your lesson? That you need to be more intentional about your spending,
or
do you
slap,
protect
But it's
the
silly to
people?
be like, I think we should touch the hot stove to figure out that stoves shouldn't be touched.
Some
I think
people
it's
need to
silly,
touch
yeah,
that
but I
hot
think some
stove,
people
though.
need to. I think people need a reality
people
check
sometimes need a rock bottom to have that I've had it moment, and that's what
Such
we see
as
on the
you,
Ramsey show.
right?
Yeah, I mean, everyone at some point that has followed the Ramsey plan has some level of that didn't feel good. I don't want to live like that anymore. You have to get to that point. So I think Americans are just too comfortable sitting on our own poopy diapers at this point. But the people who are ready to make a change, they've had life happen, and they have that emergency, and they didn't have the emergency fund to cover it, and it was scary. COVID did that for a lot of people. I mean, it spooked everyone. Like, crap, we got to get our act together. We've been just like spending, nothing in savings, nothing in retirement. Like, we don't know what life's going to throw at us, so we better be prepared.
What was the most surprising thing from going to people on the street and talking to them?
Oh, man. I mean, Vegas has, there's a lot of interesting people on the Vegas Strip that you talk to. But the most shocking thing was just, I was asking people like, did you budget for this trip? How much do you plan on spending? How are you paying for this? And the amount of people who just did not have answers. It was just like, I'm just going to swipe and I'll worry about it later. Like that lack of, there's no planning. There's no delayed gratification. It's all instant gratification, YOLO. That's a problem for future me. And the problem is future you is going to wake up going, crap, like you got a financial hangover from how you spent in December. And so that's the problem I'm saying is no one's making a budget going, all right, we're going to plan $1,000. We're going to pay cash for it. Instead, they're like, well, I'll get the cash back and I'll make the payments.
What percentage of people said that, though? That they just swiped the card and didn't think about it?
I would say 6 out of 10 people had that mentality. And we know 6 out of 10 people live paycheck to paycheck. So I think there's a strong correlation there.
Yeah.